Welcome everybody to the Governor Small Business Forum. I am Dan Droege. I've been with a banker for 34 years, so I'm going to be introducing these people here in a minute, and we've got the conventional banker right here next to me. That's my bread and butter. And we're going to be going into some other options for y'all. I am so excited to see so many small business owners and entrepreneurs here today. This is a great day for Longview, and I want to thank the governor for having this small business forum here today, so thank you. How about the previous three moderators? Didn't they do a great job? Let's clap. Good job. I need to apologize to y'all just real quick, if you don't mind. I don't know if you've noticed this or not, but I'm not as pretty as they are. It's true, I'm not. But as they say, we save the best for last. So we've got the small business financing that's going to be available, different options to you. We have 4 panelists, not 3, so it is better. Bigger is better, right? The first panelist that we've got today is Mr. Clay Thompson. He is Executive Vice President with Texas Bank and Trust here in Longview. He's responsible for credit risk management, lending, and development of the bank's credit analysts through the credit training program for the bank. He served in banking for over 25 years with both community and national banks in various capacities as a regional president, chief lending officer, and chief operating officer. Clay is originally from Tyler, got smart, now he's living in Longview, and he received his undergraduate degree in finance at Indiana University and graduated with leadership and distinction from SMU's Southwestern Graduate School of Banking. Clay's been heavily involved in nonprofit boards such as United Way of Smith County, Tyler Economic Development Council, Bullard Economic Development Corporation, and was a former city council member with the city of Bullard, Texas. Clay is married to Stacy Thompson, who's the executive director of the Longview World of Wonders, and they have 3 daughters. The second panelist is Mr. Thomas Montgomery. Thomas has a passion for helping entrepreneurs start and grow businesses to create jobs and strengthen communities. He has a specific competency in assisting small business owners in creating capital acquisition plans which serve as a roadmap to access the funding needed based upon unique goals, circumstances, and preferences of each entrepreneur. As an advisor with the Tyler Small Business Development Center, the SBDC, as you've heard before, Thomas enjoys conducting workshops to educate small business owners on the free resources and assistance available through the Tyler SBDC, including the creation of a capital acquisition plan. Previously, he's owned several small businesses and held key positions and roles that prepared him for his current contributions to entrepreneurs. He's been a senior financial consultant with Deloitte, one of the world's largest accounting and consulting firms. He's been CEO of a large medical group with 100+ employees and a $1 million monthly budget. He's been the administrator of 5 independent physician associations encompassing 100+ physicians of all specialties. He's done a lot. He's financial literacy educator with State Farm Bank, teaching a grant-funded curriculum. He was a former SCORE workshop chair for an 911 county area and certified mentor, and he taught accounting, economics, and entrepreneurship at a Dallas-Fort Worth area high school and adult education at North Central Texas College. Mr. Montgomery has a master's in health administration with an emphasis in strategic planning from the University of Minnesota's School of Public Health and a master in business administration with an emphasis in finance from the University of Minnesota's Carlson School of Business. His undergraduate degree is in business with a dual emphasis in healthcare administration and accounting. Thank you, Thomas. Our third panelist is Mr. Chuck Vanderbilt. Chuck is with the East Texas Regional Development Company, or ETRDC, if you want to use the acronym. He's responsible for directing, planning, and coordinating financial and other administrative and support services for the East Texas Regional Development Company, small business loan programs, serving the ETRDC board, and ensuring compliance with state and federal laws, regulations, and policies. Through the ETRDC, Vanderbilt's mission is to spur economic development in East Texas with the SBA 504 programs, USDA rural development programs, and the Chapman loan programs. As a banker, we work closely with these guys on doing these programs. Chuck brings with him 7 years of experience in business advising and ownership. Prior to accepting this position, Chuck most recently served as a business advisor for the Kilgore College Small Business Development Center, SBDC. Are you hearing that a lot today? They do some great work, y'all. And as a small business owner of an ultrasound offices with locations in Longview and College Station, Texas. Whoop. Vanderbilt is a 12-year resident of Longview and is married to Lindsay Vanderbilt. Together, they have a 7-year-old son in 2nd grade at Spring Hill Primary and a 2-year-old. And finally, our 4th panelist this morning is Mr. Richard Gianni. He came to Lift Fund Incorporated in April 2014 with almost 4 decades of retail banking experience from community and regional banks in the Houston area. Throughout his career, Mr. Gianni has held many management roles, including his most recent as Regional Banking Area President at Wells Fargo Bank, where he directed the efforts of 575 team members. Experienced in counseling entrepreneurs like yourselves, Mr. Gianni has continued his investment and leadership in the community by joining the Lift Fund Houston team, servicing economically underdeveloped communities and helping small business owners reach their financial goals. As the market president for Houston and the regional president for the East Texas region, Mr. Gianni develops and implements programs to enhance Lift Fund's presence in the greater Houston's area and the greater 61 counties that make up Lift Fund's East Texas region. That's a big area. How many counties does Texas have? I don't know. Over the years, Mr. Gianni has served on numerous boards to include Target Hunger, serving as their fundraising chairman for 3 years. He also served as the president for the Museum District Business Alliance for 4 years, and as a member for the Good Neighbor Healthcare Center Board and the Houston Community College School of Banking Advisory Board. So I think what you can see is that they're very talented, they're very knowledgeable. I think you're going to learn some great ways of possibly getting some business financing for you today. So we're going to start with Clay Thompson with Texas Bank and Trust. Clay, can you tell us what a typical risk profile is for a person applying for a traditional, or as I call it, conventional bank loan for his or her business?
Absolutely. Just a quick thanks to the governor, a quick thanks to LeadCo and yourself for helping put this on. This is great, a lot of good information. I'm going to kind of try to stay at a high level, and if I certainly at any time today, this week, next week, you want to dive in deeper, certainly reach out to me. Would love to talk to you. But conventional, kind of that risk profile that we're looking at is business with about 2 to 3 years operating cycle. That gives us an opportunity to look at trends, to ask questions, to see what's going on in the balance sheet and income statement. We also look real hard at the individual credit of the ownership of companies. We believe as bankers, most of us, that the way an individual owner handles their credit will be representative of how they'll handle the business credit. So that's important for us. We also like to, you hear a lot about cash flow. Cash flow is our primary source of repayment. Years ago, maybe people looked at collateral only, but as bankers, we're really trying to look at the cash flow, primary source of repayment. How are you going to repay that loan? Kind of the secondary risk profile is what kind of collateral is the business putting up in this transaction, and that's an important part, because if your cash flow isn't there, how is the bank going to get paid? So that is an important part. How much cash the individual is putting into that project is certainly something we look at. It's an important dynamic, and we try to, like in real estate, we want someone to put in 20-25%, maybe in equipment 20-25%. So we're looking for some partnership in that risk profile. Lastly, kind of what we're looking for is, what kind of budget forecast does that business have? That's an important piece because, you want to know where is this company going, right? You want to get to know, we don't want the business owner just to do the exercise of putting pen to paper. We want to understand the assumptions behind where they are going. It's kind of similar to you and I, or our families, if we're going on a vacation, right? There's a destination. There's a budget in that destination, and so we want to stick by it. And like a business owners will want to tell their banker where are they going, what's the budget of getting there, so that we can have those conversations. Those are some of the things we look at, Dan.
Can you touch a little bit more on the cash flow? Can you talk about global cash flow? A lot of times when entrepreneurs or business owners come in, they will possibly be a partner in another business, and so bankers will ask for more information on this other company that you might own as well, so we can do a global cash flow. Can you describe that a little bit?
Sure. I mean, we're going to look at the business, the borrowing entity, but we're also going to look at what other entities does that individual have. And we're going to look at the cash flows. Again, we are primarily a cash flow lender. We do look for secondary sources of repayment, tertiary sources of repayment. We look at liquidity as well. But in Dan's question, global cash flow is going to take into consideration the individual owners. It's going to take in some of the other businesses that they have majority stakes in. So that's an important part.
Great, thank you.
Yeah.
When they come in for a bank loan for a business, you have them fill out a bank loan application. What makes a business loan application successful?
I think they do fill out an application. We sit and talk, and one of the takeaways, if hopefully I have a chance to talk to you about this, but certainly is building that relationship. You've got to build that relationship with a banker, and there's a lot of good bankers in this community and in this area. And when you come in to talk to your banker, you want to know your financials. You want to know your numbers, right? It's so important to understand those numbers and what that balance sheet is saying, what that income statement is saying, and really the cash flow that happens because of your balance sheet and income statement. Besides having the good credit like I talked about, besides having a number of years of experience where we can ask questions, I think one of the really important things that I would leave you with and hopefully can talk about later is networking and that relationship with an attorney, with an accountant, and with a banker. And I know at Texas Bank and Trust, and I know at other banks, we want to be trusted advisors. We don't want to just be a transactional bank. That's not what community banking is about. We're here to make loans. And so I would just say, have your information handy. Know that the banker is going to ask a lot of questions, and that's so that they can represent you at any time within the bank and feel comfortable doing that.
Thank you, Clay. I think he touched upon community banking. I think it's very important that being in Longview, you do find a banker that you can sit down and just talk to. That's part of our job. We don't get paid any extra just to give you advice or to listen to you and give you some ideas. But that's what we're there for. Don't be scared of going into the bank and asking people questions. That's what we're there for. Of course, we do want to make you loans. We do want your deposits. But we want to get to know you. We want to help you grow your business. That's why we're doing this. Now, these guys have all lost some hair over it. I'm still okay, but I was just standing here noticing this.
Dan, obviously you're not thinking hard enough for your customers.
I guess I'm playing too much golf or something. I don't know. But I don't know if it was the glare. I don't know.
Yeah, there is glare. There is glare.
Sorry, guys. Boy, it's tough to be a banker.
Let me add to that comment, because I think that's so key that we are talking about access to funding, access to capital, but we as community bankers are so much more than that. And the employers such as Austin Bank or Texas Bank and Trust and the other fine banks here, I mean, we want to bank first generation, second generation, and third generation. And how do you do that? You establish a relationship. You're there for them at most all hours. And I think you could probably relate to that, Dan. So build that relationship, but also build it with the fine attorneys that we have in town, the fine accountants. It's part of a team, whether you're just starting as an entrepreneur or whether you've been in business for 5 or 10 years or 15 years. It's so important having that team approach.
I've actually sat down with new businesses, and it's taken up to a year for them to get a business plan, get with the SBDC, and actually get the ball rolling on their business. So, hey, we know it's not going to happen overnight. Isn't that right, Joycelyn? We're gonna be there to help answer your questions and get it there. So thank you, Clay.
You bet.
If you'll go ahead and hand it back down here to Thomas. Thomas, if you remember, is with the Tyler SBDC. Thomas. Okay, why is a strong business credit profile important to small businesses?
It's important to understand both our personal and business credit profiles. As was discussed, it's traditional that bankers will look at your personal credit. Maybe they look at all three bureaus or just one of those. But what's commonly overlooked is looking at your business credit profile. If you have an LLC, a C Corp, or a S Corp, chances are you have a business credit profile with Dun & Bradstreet, Experian Business, and Equifax Business. This is actually taken into consideration if you apply for an SBA loan. So it's important to pull your business credit and understand what's on it. I can tell you from our experience is that nearly every small business will have a business credit profile that's full of errors and omissions and inaccuracies. Some would even say that the system's kind of set up to be against the entrepreneur, because business credit profiles are for-profit billion-dollar businesses, and so they're in the business of buying and selling information. So once you file with the Secretary of State, typically your profile will be created off of that information that often is not accurate. So that's one of the things that we do with the SBDC is help you pull that business credit report and look at it, because business credit is so different than personal credit. Any of us right now can pull a business credit report on anyone else without permission, unlike personal credit. And so it reflects of how stable you are and how thorough your data is. So business credit is important. It's something that you should look at, understand what your paydex score is, understand what your DBT is, all these key metrics that your lenders may in fact be looking at, but you don't want the first time that you become familiar with your business credit profile when the lender is saying no because of certain reasons.
What is the range for a FICO business score? What's the range in there?
Yes, it's interesting. So when we're helping clients, one of the most popular types of loans that we help small businesses with, it could be startups, so they don't have to have that 2 years in business like with traditional loans, is an SBA loan. Right now we're seeing SBA loans up to $150,000 with a FICO of 165. You might say, I didn't even know credit scores could be that low. Well, there's different algorithms of FICO, and what SBA typically uses is what's called the SBSS, a specific type of algorithm that looks both at personal credit and business credit. So it's important to understand the underwriting that's going to go, that you'll be subject to as you're looking at certain sources of capital. So FICO SBSS is commonly used with SBA loans and some other lenders, looks both at personal and business credit. And did that answer your question?
Yes, what is the highest you've ever seen on a business profile? And what's the lowest?
Well, I'll tell you, going back to the first part of the question, then building off that, typically the average business will have a failing business credit profile in the beginning. And again, it's because the algorithms are set up looking for payment experiences where you've paid on time, and most of the bills that small businesses pay never get reported to their business credit profile. So the FICO SBSS is a scale up from 0 to 300. Most will have a low score, but again, it's skewed based upon both personal credit profile and business.
And again, this is separate from your personal credit score, which can be 835 or 50 or whatever it goes up to. You're going to hear more about SBA loans and things like that, and I want you to know that when you come to a bank, you ask them for a loan, we're looking at that as a conventional loan or possibly an SBA or 504 loan or something like that that would help with the guarantee if you're a startup, if there's just not enough collateral, if you need longer terms, and I'm sure Chuck or somebody else will talk on that, but that's kind of where we're talking about on that. How can the SBDC help small businesses get capital?
Well, first of all, as Brad had mentioned in the earlier session, we can help you put together a plan and financial projections to really determine how much capital might you need, not only to buy the things you need, but adequate working capital. What we want to do is help you identify the right type of capital for your circumstance. And so rather it be a bank-based loan or equipment leasing. We'll hear from Lift Fund here in a few minutes on microloans, which we've had really good success with. So the first step is to figure out, based upon your circumstances, what's the right type of capital, maybe short-term as well as long-term. But I really think that the secret sauce in what we do is not that match, it's to work with small businesses, free and confidentially, to meet the underwriting criteria. Because no matter what the source of capital it is that you're pursuing, if you meet the underwriting criteria, they're asking for, where do you want this money wired to? That they want to loan you money if you meet the underwriting criteria. And so we're very good at helping you improve your personal credit profile, improve your business credit profile, get the business plan and the financial projections in the format with the content that the lenders are looking for. If you're looking for equity, money that you don't have to pay back, we're also very good at helping you prepare for an equity-based capital raise. To date, we've had success getting 87% of small businesses funded with an average of a $997,000 capital raise. So keep in mind, it's not just debt that you might want to consider. Equity is also an option.
Great. Do you have any takeaways or any suggestions for any of these small business owners if they came into the SBDC?
Yes, we really see ourselves as kind of a rent-a-CFO. We work for free. You can fire us whenever you want. But I would recommend us to be able to sit down and prepare. But before you sit down and talk to the bankers, those first impressions are so important, knowing your numbers, as was discussed. And so I think we're probably best served to be that first conversation before you go talk to the lender, because again, we can help you find the right type of capital for your circumstance, and then secondly, to meet the underwriting criteria so you have a greater likelihood of being approved.
As you saw, everybody up here is nodding their head yes. Go to SBDC first, then come to the bank. You do it the other way, it still works. We'll refer you probably to the SBDC to help do the business plan, to help you get some sort of a outline of where you're wanting to be and do a 3 to 5 year plan or something like that. So, all right, thank you very much, Thomas. Next up, we have Chuck Vanderbilt with the East Texas Regional Development Company. Chuck, I've heard about certified development companies. What are CDCs?
Yes, so I manage 3 loan programs through a certified development company in Kilgore, Texas. It's the East Texas Regional Development Company. I'm housed within the East Texas Council of Governments. My office really serves the 14 counties that ETCOG provides services to. So I work with small businesses throughout these 14 counties. I work with EDCs, chambers, SBDCs, lenders, really to do what I can to partner with these stakeholders to put money in small businesses' hands. As has been said, we want to lend you money. We want to get the money out there. We want businesses to get started. We want you to get funded. We want you to hire. We want you to increase the tax base. We're here for economic development purposes. But my office specifically partners with banks and other institutions really to unlock funds for small businesses. And an example would be a startup business. As you heard, they typically want 2 years or 3 years worth of experience that they can look back at your track record and see how well you've done. If you want to start your business, you need to fund it. It gets a little bit more difficult. That's where we can step in through an SBA loan, a USDA loan, a Chapman loan through my office. We can get funding into a startup's hands, little or very large. So my office does loans as little, 30 to 50,000, and projects up to 15 million. So we really are here to serve and to unlock funding for small businesses in East Texas. Again, my office's job is to spur economic development here in our communities, and it is something that I am passionate about. I did come from the SBDC. I love working with small businesses of all different types, industries, sizes. I learn something every day working in economic development, and that's something that I love about it. But my office, so we do an SBA 504. There's multiple SBA loan products out there. This one is specific for commercial real estate or large fixed heavy equipment with a lifespan of 10 years or more. In that deal, it's a 3-party deal. So right off the bat, we're a partnership. We partner with a bank who does 50%. The SBA through my office does anywhere from 30 to 40% of your total project costs. And therefore, the owner equity requirement is a little bit lower than what you'll see on a traditional loan, which we heard was, anywhere 20, 25%. We can get it down to as little as 10% through this loan program. And really, it serves a purpose for the small business, and it serves a purpose for the bank. If it's a startup, you're automatically going to be considered more risky than an established business. So it limits the bank's risk, so they're more likely to lend. And it creates good terms for you because you're looking at a fixed interest rate below market. It just recently changed, but before the most recent rate hike to 5.25, when it was at 5, those rates were coming in at about 5.25. So it's below market rate. It's fixed up to a 25-year term, which really helps with that cash flow. It helps you to prepare in those planning stages. Okay, I know my monthly loan payment's going to be this. It's not going to change as rates go up, which we're all seeing now. It's not if rates are going to go up, it's when. It's how many times in the next year will it go up. So it's an opportunity to lock in a fixed rate financing for your business project. On the USDA Rural Development Loan Program that I manage, that's, again, it's meant for small businesses within Cox 14 County region. However, it's a rural development program, so it's the communities with 50,000 people or less. So basically, you take Cox 14 County region, if you take out Longview, you take out Tyler, every business else remaining would be eligible for these funds. It's up to 150,000. It can be used for various things that you might need that some traditional loan through a bank, they may not want to fund necessarily working capital, inventory, things of that nature. Well, we can partner with the bank and they can fund your business project with what they're comfortable, and then we can step in with the USDA and say, okay, we'll finance your inventory, your working capital, so you get more funding, you get your project fully funded. It is, it's multiple notes, but that's what we're here to partner and be creative and do what we can do to unlock those funds for your small business. We're kind of that institution that's there for the small business that might struggle to get that traditional loan. A perfect example is this past Friday, my board approved a Chapman loan for about $68,000, and this borrower had a personal credit score of 576. And you take that to most banks, you're not going to get approved. But it was extenuating circumstances, things of that nature. I was able to get funding in that small business owner's pocket so that he can continue managing his business successfully. So that's really what my office does. We're really here to spur economic development in East Texas. I can do SBA loans anywhere in the state, but my focus is the East Texas community.
And I can tell you, in years past, it used to be bankers would look at a conventional loan for you first. If they couldn't do it then that way, then they would look at doing the SBA or 504 program. I think that has evolved and changed over the years, that we have become great partners with these guys. And if you walked in the door, that's what we're thinking about right off the bat. So it's been really good. In another description, if you came into a bank and you needed an equipment loan, you needed a real estate loan, the bank would look at, and I'm not trying to hurt banks here, but the banks would look at a 20-year probably real estate note. We would look at a 5-year equipment note. If we did the SBA or 504 program, we would be looking at possibly combining the two into one and getting an average weighted maturity of some sort. If he can go 25 years on real estate, you can tell you're going to put all that money onto a longer term. Your payment's going to be a lot smaller. It's going to help you up front as a started business. So great benefit for less equity as well. So
Yes, absolutely.
great. Chuck, what should small business owners do before sitting down with a lender? What do you suggest for them?
I see that a lot. I saw it at the SBDC. I see it now. I'll get businesses that will reach out to me and they've not done the planning stage. So, my first, instinct is to refer them to the SBDC to start that. A failure to plan is a plan to fail. Take the time. I'm notorious for being known of overthinking situations, but you don't want to wear yourself out. You want to start taking action. But I understand you, once you get that first spark, that fire, you just want to hit the ground running, but, stop, slow down, really think about it, and utilize the resources that are available to you. They're numerous. Obviously, the SBDC has been an obvious one here. But take the time to meet with them. It's confidential. It costs you nothing. They're an unbiased opinion. It's not your friend. It's not your family member. It's not your business partner. They can really help you look at things that you may not be thinking about, and really give you a good and fair assessment, because at the end of the day, a more informed business owner is going to make better decisions for their business. And that's what they're really there for. And yes, a big part of what they do is the capital acquisition plan, but they do a whole lot more than that. They have access to so much market information that will really strengthen your business plan, that would cost you a lot of money if you tried to get it yourself. But by going through that office, it costs you nothing, and it can really strengthen your business plan to a point where you can get a yes instead of a no, because it's not what you think, it's what market data says. And that's what we that have to try to unlock these funds for you, that's what we really have to look at. And they have access to that to really strengthen your capital acquisition plan or loan request package, whatever you want to call it. But that's really utilize that source. I would also, it was also expressed the team aspect of the attorney, the accountant. Have those people that you can rely on, that you can go to, that when something goes wrong, you know who you're going to call. It'll make you better. And I also want to stress it's important that you consider yourself. If you work for a company, they put you through professional development. If you're an entrepreneur, you have to be the one to send yourself to professional development. And it's important to continue that. Now, I have a non-traditional way that I ended up behind a lender's desk. I started out in education, so I've kind of had that beat down into me of being a lifelong learner, but I really feel that's important, and it's something that you don't want to brush to the side once you become an entrepreneur and you're putting out the daily fires. It's easy to kind of let that slip. And I'm not sure if I answered your question.
Oh, you did. And
I'm starting to preach a little bit.
No, that's okay. Something else that has been touched on twice this morning is don't give up.
Yeah.
Keep after it. Believe it or not, all of us up here want to help you succeed. We want you to be successful. We want to be partners with you. We want to see you grow your business. One of my best customers was somebody I turned down on the first loan. I turned her down on her second loan. And she finally figured out a way, and we were able to get this to work where she had enough collateral. She had to get some other investors and things, but made it work out great. And she succeeded incredibly. So that's what we love to do. We love to watch you all grow and succeed, and that's why we do this. We don't have a rubber stamp that says no on it. Don't believe in those stories. But and I know you hear we only loan money to people that don't need it. That's not true either. We try to make every deal work. So find you a banker that you can trust and sit down and talk to. Okay. All right. Thank you, Chuck. Anything else before we go on? Okay. All right, our final panelist is Richard Gianni with Lift Fund. And there's been another acronym out there, CDFI, which means Community Development Financial Institution Fund. Can you tell us what that is?
Absolutely. So CDFIs were created under legislation back in the early 1990s, when at that point in our economic history, there was also a downturn. And so in the Clinton administration, there was a lot of concern, because typically what happens when the economy softens, banks typically then have to tighten the belt. You've mentioned a couple of times here, and myself being a retired banker, bankers tend to get a bum rap when it comes to making loans. Everybody in this room, including us up here, have our money in a bank. And so we have an expectation when the bank loans our money out that they're making good decisions, right? So when the economy struggles, banks have to tighten up even more so. So CDFIs were created to try to fill that gap. Typically, the sector in our economy that tends to suffer the most during periods of challenge is the small business sector. That's you in this room. And every one of you in this room are part of a very, very powerful coalition of entrepreneurs. You represent 63% of job growth in our country. And I would imagine that those statistics are extrapolated to an even higher level in some of our smaller rural communities. You know, if I think about the coastal Bend counties that were devastated after Hurricane Harvey, in many of those towns, you're talking about 100% of the workforce being dependent upon folks like you in this room today. And so CDFIs were created to try to bridge that gap. CDFIs are not banks, so our funding, in fact, predominantly comes from our bank partners. So when banks can't take the risk on the transaction themselves, and keep in mind that not only do they have a fiduciary responsibility to us as depositors, they're also heavily regulated. The OCC, does that sound familiar? The FDIC, and I could go on, the state regulators. So they have to be very careful in terms of what the quality of the loans look like on our books. But when they invest in CDFIs through the form of a credit instrument, whether it's a term loan facility or an equity investment or whatever, they are diversifying that risk in healthy financial institutions called CDFIs. We then take that money, and because of the experience we have, and for Lift Fund, that's now over 24 years. And our experience extends to almost $290 million in loans that we have made to small business entrepreneurs like you in this room. That's over 20,000 small businesses. And over the course of that time, have also figured out how to manage the risk, because the average credit score in our portfolio is about 590. So our loss rates tend to be below 4% year in and year out. So banks have the confidence to take a lump sum investment and put that in us, so we can diversify that risk by investing in you. And so that's where we fill that gap.
What does a small business owner need to do to qualify for CDFI loan?
Great question. And
Thank you.
You're asking some really great questions. Maybe that's why you still have all your hair. I don't know. You know. You know, the thing that I have said over the course of my career, and not only as a banker, but also now being in the CDFI sector for 4.5 years now, one of the things that constantly comes to my mind when I talk to business owners, and you've heard that theme stated up here as well, be prepared. Separate the excitement and the emotional connection to the concept and the idea that you want to move forward with, and balance that with being absolutely prepared. And utilize the resources that are in the community to help you do that. That's not a hill you have to climb alone. Most folks are expert in what they do. Most folks are not expert universally across all the various disciplines that you're going to be exposed to, though. You're not going to be a CFO, although you need to be a CFO. You're not going to be an accountant or a bookkeeper, although you need to be that. You're not going to be an HR expert, although you're going to need to be that too. The key is to get people who are expert in those areas to support to you. And that starts with, what are those letters? The SBDC in many cases, to help you take those ideas and put them together in a plan. For those of you who are already in business, and you may think you can't qualify for a loan, don't let that be a deterrent. I can't tell you how many times we're told when somebody finally comes to see us, and by the way, we don't. In our business model, we don't call on small businesses. All of our small businesses come to us from our partners. We're not a for-profit commercial enterprise. We're here to work with businesses by providing capital in the form of affordable term loans and a lot of technical assistance. And we work closely with many of our partners to do that. We constantly hear from established businesses, well, I just don't think I'm going to qualify. You know, I've already been turned down once or twice. And so they tend to give up. And that would be what I would say to you, is don't do that. Our goal is to get every client that we have back to their bank. And I think that's another important point to make here. Banks aren't just about writing a check for a loan. They also have other services that you need. And so while we're working with you as a CDFI on the credit side to get that back to a point where perhaps the bank can then help you, you need to leverage the other financial services that a bank can assist you with today as it relates to deposits, other cash management and accounting services, et cetera, et cetera, et cetera. They need to be your friend, and you need to get to know them. We need to occasionally move out of the drive-through lane and go inside and introduce ourselves and get to know the banker.
Thank you, Richard. And let me just say, I've been president of a regional bank. I've been president of a community bank. And if you're a new business owner trying to start your business, us community bankers are going to try a little bit harder, I believe, than the big regional banks. Our hands aren't quite as tied by the corporate red tape as others are. But so, again, I can't tell you enough to get to know a banker, okay? And as the common theme has been all day long, find the SBDC office, okay? I can't say enough about Brad Bunt and what he has done for this office here in Longview over the years. He's been here since 1980, what? But Brad did a great job to get that started and has just created a great atmosphere with all the banks and working together. So I can't compliment him enough. Any other ideas or suggestions? We're getting up on the lunch and dessert time. Anything? Does anybody have any questions they need answered real quick before we break for lunch? It's easy being a small business owner, isn't it? Do you lose sleep at night? Believe it or not, we lose sleep at night too, worrying for you. Okay? All right. If anybody needs any of our emails or anything, I believe Amanda with LeadCo would have that. If you wanted to get with her, we'd be glad to answer any questions for you after this. So appreciate you being here. Thank you.
Thank y'all.